how to invest successfully in Malaysia now, anytime, anywhere, so you don't become the poor confused guy on the right. Am I qualified to talk about this? Well, you can actually check out our client testimonial and our main official website as the only independent licensed advisor in Malaysia with such a large YouTube following. I let you make your own conclusion. Robo-advisor or ETF. Now, I've done such a series of videos on robo-advisor. Click on the upper right hand corner after this video to really watch that detailed explanation of everything you need to know about robo-advisor in Malaysia. What's your expected return? You could end up losing your entire capital, or it could be getting like 20% or anywhere between that every single year. Different robo-advisor uses different methodology or algorithm to manage your investment, like when to buy, when to sell, what to invest, how to invest, right, the strategy. Credits to iMoney for this table, but you have to also understand that even though robo-advisor is so new, in Singapore they have robo-advisor that actually shut down because it's not viable to continue the business anymore. And to credit a Singaporean comic blogger called the Work Salary Man, the robo-advisor might be simple to invest with, but they are not low risk. And robo-advisors are not genius tools that allow you to beat the market in short term every single time. And I could actually draw a diagram on a napkin to explain what is a robo-advisor. It's basically a black box, and human actually program a certain learning algorithm inside the black box that enables the robo to take in inputs and learn past experience, taking into account all the economic variables or every other information that is relevant for them to make a buy and sell decision to actually maximize your return. And they might be right, they might be wrong, just like human. They learn over time, which is why there's this thing called the feedback loop. Now, that being said, can robo-advisor actually beat the market or actually predict the market? Now, it turns out no. To quote the Work Salary Man article again, where he's managed to actually screenshot comments on social media of people actually dropping comments on one of the robo-advisor Facebook page or website, and you might want to pause this screen and really see what is going on, because there's a lot of things that you still do not know about how robo-advisor really works, and some of the things you have no idea how they work. Remember of the black box that I talk about? So yeah, it's news, it's sexy, and by the way, they are not without fees, although it is really not high, but these are again credits to iMoney website for actually comparing as of now what are the available robo-advisor in Malaysia and what corresponding management fees. But I think a lot of people are actually jumping on the robo-advisor bandwagon is because what I call as the herd behavior, because it's shiny, it's new. But bear in mind, a lot of these robo-advisor, they are not actually coming out with their own investment products or ETFs or even funds. They are investing into this fund that has been around, since 10-20 years. Even in 2008 until 2011, without this robo-advisor comes into picture, I was already investing directly into some of these US funds or exchange traded funds or ETFs, as I can show you in the screen over here. So it's really nothing new. It's actually for people who are too lazy to make their investment decision to decide when and what or where to invest. So robo-advisor just make a decision for them. But with just a little knowledge, actually, you could still make your own decision. Now, I've shown you over here that some of these ETFs, before robo-advisor even exists, are already invested in a diversified basket of global ETFs in US and in international markets. And robo-advisor always tends to attack the conventional unit trust funds because of their high fees, which is understandable. Next, we move on to REITs. REITs are something like a second retirement pension, and then you should consider investing not only in Malaysia but only in the Asia Pacific and global REITs. And REITs are basically commercial property. There's no tenants hassle to deal with. They are relatively stable in terms of pricing, and their dividends is very liquid. Unlike property, you can sell it anytime. There's no need to take any loans, and it's also for people who sold their property and want to reinvest into a property exposed asset without, again, the tenancy hassle. There's no taxes to deal with. The dividends are pretty consistent, and most importantly, Compared to bonds, it is actually inflation hedge.
Are you unsure how much longer you should hold onto your worst performing real estate investment property, or whether you'll be better off selling it as soon as possible? You get tired of attending property investment seminar by property gurus who are still trying to convince you property investment is still as easy and profitable as 5 years or 10 years ago? Well, they might be right, or they might have their own agenda for saying so. Want a non-biased second opinion? I'm conducting an online web class this week to answer this burning question. You are also going to discover if your property is at risk of not able to increase your tenant's rental in the future. If you feel you are going to benefit from these out-of-the-box insider insights, click on the link in the description below after you finish watching this video, and it will bring you to a page that looks like this. No credit card required, but availability is limited. We get filled very fast. Seats are reserved on a first-come, first-served basis.
So there's really not much bad things about REIT, which is why REIT is again like your innocent kitten. You could expect a dividend returns of 5 to 8% per year, growing every year 3, 4, 5% with a very modest capital gain. For an entire full explanation of how REITs works and what are the REITs, how to actually analyze REITs and all that, there's a complete REIT investment series videos in CFU channel. I want you to check out in the upper right hand corner to watch that series of videos after these videos end. How about insurance savings plan? I also have a previous video dissecting what are the real return of investment for all those insurance savings plans. You don't want to miss it, so I want you to actually check out again what is on the upper right hand corner after this video ends. By the way, comments below if you want to get a webinar invite on how to transition from an underperforming brick and mortar property portfolio to a fully REITs portfolio that can give you a higher and more consistent rental income. Comments below, I'm going to send you the invite link. By now you would have a question wondering, should you actually do this yourself? Then my question to you is, do you have a lot of time to do this yourself and you can actually afford to pay so-called tuition fees? Because the difference between a smart man and a wise man is a smart man learns from his mistake, but a wise man learns from others' mistake. Of course, the fool make a mistake and never learn. Do you still want to reinvent the wheel or not? Or you just want to shortcut your way to really learn and know whatever really works and ignore the rest of the things that are nothing but fluff and noise? You might also wonder, should I do this now or later? Now my answer to you is I don't know, because it depends on how important this is for you. Are you okay with taking it easy and don't care and whatever as people are actually moving forward in life? I don't know, only you can decide. While time and tide wait for no man, it's the same with investment, with the market. It also waits for no man. I would really appreciate if you give this video a like, click on subscribe, and at the same time hit on the notification bell so that you'll get notified when we publish more videos like this in CFU channel. If you have any question, you want to send your thank you want to send your hate comments, you are most welcome by leaving your comment in the comment section below.